Do you want to invest in the stock market? Are you someone who's just about to start? Well, this video is for you. This video will start with the basics to help you kick off a great beginning in your stock market investing journey. In this video, you will learn the basics about stocks, how to get started, what investing strategies you can employ, and which stocks you must check out. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the essential details that can help you keep yourself up to date about finances, wealth, and investments, then make sure to watch until the very end. So you must have heard other people talk about stocks, right? Wealthy people, whether they are millionaires or billionaires, have their money in stocks, and they are earning lots of dollars because of it. Imagine working over 40 hours a week only to earn a margin of their passive income that they earn without putting in the time. They don't have to commute to work every day. They don't have to wake up early, and they don't have to work hard at all. This is why you must consider investing in stocks. With stocks, you use your money to grow more money. With this, you will be able to get a hold of your time and ultimately achieve financial freedom. Now that you know what stocks are and why you should consider investing in them, it's time to move on to the next segment, which is how to start. To buy and sell stocks, you will need to open a brokerage account. Many online brokerage firms offer easy-to-use platforms for buying and selling stocks. You'll need to provide some personal information and may need to make a deposit to fund your account. Charles Schwab, Fidelity Investments, TD Ameritrade, Robinhood, and Webull are some of the brokers you can start with. Do note that Webull and Robinhood have small fees with free trades, while the others are brokers that are considered safe and with great history. Just look them up, register, and fund your account. You can finally buy some stocks once you're done. Once you have a brokerage account, you will need to decide which stocks to buy. Many people already fall off after reaching this step. It might be because of the excitement from buying their first stock or just plain greed. To avoid this bad result, it is a must for you to look at which strategy you want to use and which stock to invest in. There are 4 kinds of investing you can do, namely value investing, dividend investing, passive investing, and growth investing. First is value investing. Value investing is an investment strategy that involves buying stocks that are believed to be undervalued by the market. The idea behind value investing is to identify companies that are trading at a discount to their intrinsic value, or the true worth of the company based on its fundamental characteristics, such as its earnings, assets, and growth prospects. In basic terms, is like looking for a good bargain deal. However, instead of looking for these bargains outside, you'll find them in the stock market. Warren Buffett used this strategy to grow his money. With this kind of investing, he was able to become wealthy and finally become a billionaire. Value investors aim to buy stocks that are undervalued by the market and hold them for the long term until the market recognizes their true value and the stock price rises. Let's now move on to dividend investing. Dividend investing is a strategy that involves buying stocks that pay dividends, which are distributions of the company's profits to shareholders. Dividend-paying stocks can provide a source of regular income for investors, as well as the potential for capital appreciation. Dividend investors may focus on buying stocks from companies that have a history of consistently paying dividends and increasing their dividend payouts over time. Other than a good dividend stock history, you must look out for high dividend yields, low payout ratios, and earnings. Dividend investing can be a good way to generate income from your investments, especially for investors who are retired or seeking a steady stream of income. Some of the dividend stocks you must check out are Coca-Cola, 3M, Johnson & Johnson, and AT&T. Next is passive investing. Passive investing is a long-term investment strategy that involves buying and holding a diversified portfolio of assets, such as stocks, bonds, and cash, over a long period. In other words, with passive investing, you're actually putting your money on stocks that trace a certain market category. Passive investing can be a good option for investors who want to minimize risk and avoid the time and effort required to actively manage their investments. The goal of passive investing is to achieve the average market return, rather than trying to outperform the market through individual stock picking or market timing. Passive investing is often contrasted with active investing, which involves trying to outperform the market by actively selecting and trading individual stocks or other securities. One common way to implement a passive investing strategy is through the use of index funds, which are mutual funds or exchange-traded funds, or ETFs, that aim to replicate the performance of a specific market index, such as the S&P 500. Index funds are managed passively, meaning that they are not actively managed by a fund manager, and they generally have lower fees than actively managed funds. Last but not least is growth investing. Growth investing is a strategy that involves buying stocks in companies that are expected to experience rapid growth in the future. Growth investors seek out companies that have strong potential for revenue and earnings growth, as well as a competitive advantage in their industry. They may focus on companies in fast-growing industries such as technology, healthcare, and e-commerce, or those that have a unique product or service offering. Growth investors are typically willing to accept higher levels of risk in exchange for the potential for higher returns. With this, you can check out Palantir, Coinbase, and Intellia Therapeutics. After going over these different strategies, it's up to you and the results of your research to decide which strategy to employ. Of course, it's crucial that you don't delay because of hesitance. If you really want to be good at something, you should learn to start small till you find your way through to get bigger. As always, we in EM3 wish you the best of luck. In the meantime, we hope you enjoyed watching this video, and don't forget to give a thumbs up if you liked it. Be sure to watch our other videos so you can stay on top of anything financial. Please subscribe if you haven't done so, especially if you're looking for tips, ideas, and other related information that can help you achieve financial freedom, stability, and independence. Thank you for watching, and see you in the next video.